What do you think? I mean, we're at 167.79 on cable right now. How high can we go?
Well, higher than this, I think. The Bank of England, in my opinion, is very likely to be the first central bank to raise interest rates. I think they'll hike in Q4 this year, probably in November. We've seen with these data today, it just adds to a long list of positive data for the UK, of good news releases. And this one today shows manufacturing rising for the 5th consecutive month, the strongest annual growth since 2011. On a three-month basis, it's actually the strongest since 2010, or ignoring that, the strongest since 1999. So this is another decent set of data that show the UK has strong momentum and is likely to continue growing.
I mean, and as the ECB acts as it does, shorting or buying sterling, shorting the euro must surely be the. I know you're not an FX analyst, but it must surely be the trade on that front.
Well, you're right. The central banks are now heading in very different directions. We have a much more dovish-sounding ECB and a Bank of England that's still trying to sound dovish for the main part, but is, I think, heading in a more hawkish direction. Along with these manufacturing data, we have very strong PMI readings, very strong survey readings, strong anecdote as well from manufacturing and services, and a booming housing market. It all points in one direction.
We've got jobs numbers out tomorrow, right?
That's right. That will be another, I expect to be another positive release for the UK. Unemployment down, employment growing very, very strongly. The one wrinkle there will be wage growth. They need to watch very carefully for that. Wage growth is likely to slow quite sharply because of a big spike in bonuses last April because of the changes to higher rate income tax.
And how will the bank view that?
Well, I think it will look through that volatility there, but it's important when the release comes out, these numbers won't look totally positive for wages, but as I say, it should end up being temporary. The Bank of England is totally on top of that and should look through the volatility.